Thank you very much, and thanks for being here this afternoon to listen to me. Melior Resources, it's a TSXV listed entity with a market cap of a bit over $30 million. Our primary asset is the Goondikum ilmenite and phosphate rock mine located in Queensland, Australia. And the big news for us is that just within the last month or so, we have put together a funding and offtake package which allows us to get that project back into operation. And that's on the back of prices that have improved and stabilised significantly in the last 12 months. So that's a big milestone for us. The funding package is made up of effectively a $5 million prepayment from a large Chinese ilmenite producer in conjunction with an offtake agreement with them, along with a $7.5 million US million loan from our major shareholder, Parler Investments. Together with that debt facility, together with a small equity raise in January, has given us the capacity to announce a restart, which we did only a few weeks ago. So we have some strong committed partners, shareholders, financiers and customers, and are looking pretty positive from that point of view. Highlights of the funding package, that's what I've just gone through. Highlights of the offtake agreement with Hainan Wensheng. In conjunction with their $5 million prepayment, we will provide them 600,000 tonnes of ilmenite offtake over the next 6 years. That's about 2/3 of our annual production. If they don't take the tonnes, they don't get their $5 million back. So that's quite a nice facility for us. We paid them a marketing fee of between 5% and 12%. At the upper end, as the price increases, so does the marketing fee. There's some other nice bells and whistles with that. If the price reduces down to a minimum threshold, the fee is suspended and accumulated, and we pay that when the price actually returns. So that's a good position for us to be in with our ilmenite offtake. We have unallocated 60,000 to 80,000 tonnes of ilmenite, which we will likely make an announcement about in the next month or so as to where we're going to place that. Likely to be Japan and Korea is our natural market there. Ilmenite, it's a strategic industrial mineral with lifestyle uses. It's actually a black sand that goes into making a very white pigment. And the pigment has very useful properties in blocking out ultraviolet light and all sorts of light. So that goes into all sorts of consumables, including cosmetics, paints, inks, plastics, and used in everyday life and all sorts of consumables. So it is difficult to substitute, and the world can do without TiO2 pigment, but it would in fact be a very drab place. A couple of things to take away from this slide. The per capita consumption in China at the moment remains less than 50% of the more advanced economies in the US and Europe. So whilst the consumption of titanium pigment is linked generally to GDP growth at 2.5% or 3%, China, with its underutilisation per capita, has huge capacity to increase its usage on a per head basis, and with 1.6 billion people, that should power our offtake for the next, or our industry for the next 10 years. So that's very positive. On the demand side, on the supply side, there are some big projects around. However, they are quite constrained, very difficult to get funding, build the projects and commission those projects within the next 3 or 4 years. So supply side constrained, demand side quite strong and consistent over the next 3 or 4 years. We think the outlook is very strong. The other thing that we are doing in our restart is upgrading our ilmenite product from a second tier product to a top tier product. And you'll see there that graph shows the growing premium or differential between standard ilmenite grades and top quality ilmenite grades such as ours, and recently that's been as high as 20 to 25%. And that's reflected in the price that we will get for our offtake agreement with the Chinese, which is linked to a 15% premium to the African imported price into China. Gundicum, we also produce apatite, which is a phosphate rock, about 40,000 tonnes a year. We have a life of mine offtake agreement for that product at 150 Australian dollars per tonne. That goes into the domestic organic fertiliser manufacturing industry, which is a great industry to be part of, and that's a perfect place for us to place our phosphate rock, which is actually very low in cadmium and heavy metals and ideal for organic fertiliser manufacture. Gundicum, a past producer, it's had about $120 million of capital already spent on it, so there's a lot of infrastructure and plant and equipment on site there. We've maintained it in very good order over the last 2 years, and so it's ready for a quick and efficient restart. It will take 6 months to get back into operation, so we'll be back into operation in November this year, shipping in January next year, and genuinely cash positive by second quarter 2019. We have plenty of upside with respect to both extension of the project and expansion. Our current mining plan sees us exploiting about 23 million tonnes out of a resource of over 90 million tonnes. It's in an ideal location. It's about 5 hours drive north of Brisbane, where I'm located, and about 260 kilometres by road inland from the Port of Gladstone, which is an excellent exporting facility. Gundicum will produce about 160,000 tonnes over the 9-year mine life, but that's high graded in the first couple of years, gets up to 200,000 tonnes of ilmenite product. The ore is actually like garden soil, so it's there's no drill and blast. It's very simple to mine. It's mined from surface. We take off 200 mils of topsoil and go down between 0.5 metre and 6 or 7 metres in depth. Environmentally, it's very benign, so a few years after we've finished mining, you won't know that there's been a mining project here. Process-wise, it's all conventional processing equipment, and we have operated the plant at the nameplate 375 tonne per hour throughput previously, so we think the restart is low cost, quick and low risk. The financial metrics are quite compelling. Over $46 million in net present value at project level, compared to our market cap of around 30 million Canadian dollars. Very high IRR and quick project payback by virtue of the very small capex required. Pre-production capex is around $7 million US, and then there's some working capital on top of that to commission and get up to full production. But in the scheme of things, very low capital per tonne of production. Our full operating costs, about $124 per tonne, and current pricing is between $190 and $220 a tonne, so we're looking at pretty attractive margins there. Operating metrics, you'll see, I'm running out of time here, so I'll skip a few slides. You can go to our website and see that, but effectively 9 years, 160,000 tonnes per year of ilmenite, 40,000 tonnes of apatite. Very low capital cost intensity compared to our peers. Upside exploration opportunity. You'll see the circle there is what we call the Gundicum crater. We have the corner 25% of that under mining lease, and the rest of the crater under exploration permit. There's over 90 million tonnes of resource in that total area. We have a very interesting processing technology, which we think will add some value to the company over time. It actually competes with conventional slagging, but does it at much lower temperatures, much lower electricity consumption, and much lower operating complexity. So that's sitting on the side and is quite intriguing. Our strategy, we will restart Gundicum as quickly as possible, get it operating, optimise it, and get it generating good cash flows as quickly as possible, and then build off that as a platform asset to undertake aggressive merger and acquisition in like industries, both in Australia and around the world. And we see that as our way forward. So thank you for listening today, ladies and gents, and that's my discussion.